welcome to Sectors Up Close. I'm Elena Casas. Today we're focusing on clean energy and the materials we'll need to help us reach net zero. My guest is Satya Pradhuman, Director of Research at Cirrus. As the world races towards clean energy sources, demand for the materials needed to achieve that is rising fast. Hunger for products such as lithium for batteries, cobalt, graphite and nickel is set to soar over the coming years. That may explain why commodities indexes have weathered the global economic headwinds much better than the wider equity markets. While commodities are up, however, slightly, the S&P 500 has lost more than a fifth of its value so far this year. And way out ahead in terms of performance is lithium, a key input for electric vehicle batteries. The Producers Index is a standout in terms of performance year to date. So are commodities, especially those needed for the green energy revolution, a safe haven in times of huge uncertainty? And to what extent will the current tensions between the US and China and the threat of retaliation in rare earth metals, of which China is a crucial supplier, impact on this vitally important sector? Well, let's look at whether transition materials are a good buy with Satya Pradhuman, Director of Research at Cirrus. Satya, I know you've done a lot of research into this, so just how much are you expecting demand for these key materials to increase in the next 5 or 10 years?
I think some of the sources we've looked at, we're looking at, to some degree, 40 times jump in the next decade or two in most of the clean energy areas. Lithium is probably at the top of the list with a 40-fold growth in about 20 years or so. And it follows with cobalt, nickel, even copper. And so the irony in this moment is that to become clean, we're going to get dirty. And in an interesting way, I think this is terrific in the sense that as an investor, we're not just thinking about very, very speculative technologies, but also old economy industries such as mining.
As you mentioned, though, the energy security situation has sent fossil fuel prices skyrocketing, and we're also now worried about a global economic slowdown that could reduce energy demand. So do you not think that either of these headwinds could take away from demand for clean energy?
If we can get through the headwinds of the recession, we come through this with probably a pretty significant surge in some of these commodities. So in the research where we're at, we're looking ahead of this global recession. Hopefully it's not as bad as everyone thinks, and potentially we miss some of the damage. But nonetheless, I think there is a moment here to consider these opportunities because there is some downside risk in the short term.
You mentioned a potential 40-fold increase in lithium. Is that possible? Can we fulfill that level of demand?
I think that's on paper. And the reality, though, is that as an investor, what we've got to think about is where are we going towards? And it's clearly an increase. So the rate of change on the demand for this is accelerating. And I think that's really what drives the stock prices, the investments. And there's a lot of uncertainty. When you think about the moment, besides the technologies involved, you've also got some serious geopolitical changes underway. And in a world that's not globalizing, that we may be stalling out on that, a lot of these strategies that have surfaced, they become more expensive and more drawn out.
You mentioned globalisation, or sort of the partial reversal of globalisation there. There's obviously some serious issues with some of these rare earth metals in terms of where they come from in the world and how difficult they are to import, especially with regard to China, which is, of course, a key supplier. And we're seeing more and more trade tensions between the US and China. How are you expecting that to impact on global supply of these materials?
Yeah, I mean, I think there's a foot race underway right now where all these other markets, there's a high and low search from Africa, South America, et cetera. So I think it will be a combination of potentially it's also a factor that could cause the party to be a little bit friendlier. I think we do need each other. Two, I think it does push us for a search to alternative sources. And I think it propels technology. So chemistry is going to play a much bigger deal because some of these elements could be potentially replaced if we get the technologies to surface. Some of it's already underway. So I think I'm optimistic about it, but I do think, being a Game of Thrones fan, I think it's a little complicated.
So from an investor perspective then, how can you get some benefit? How should we be approaching this sector?
When you look out on the landscape, there are enough ETFs that will get you some exposure. So, for instance, there's Clean Energy QLCN, which allows you to get access to some of the companies playing in the space. American Energy Infrastructure, EMLP, even some of the solar plays with ticker TAN. Those are examples. And then if you take this further down into water, there are a few choices there as well, such as FIW and PHO. So I guess what we're looking at and struggling with is there are a lot of dynamics operating here. And so some of these products and the funds, they are very much blanket exposures. It's going to be hard to get surgical exposure right now because it's still evolving.
Well, thanks so much for joining us, Satya Pradhuman, Director of Research at Cirrus. Well, that's our look at the clean energy materials space. I'm Elena Casas, and this is Reuters.